we're sticking by our forecast that we made in December 2024. We think Bitcoin ends the year at 200,000. I think ETH hits a new all-time high. I'm actually maybe even relatively more optimistic on ETH than Bitcoin, because I think it has some catching up to do to where it is from a narrative perspective. But all-time highs for ETH, 200,000 for Bitcoin. I think it's going to be a very exciting end of the year. I should say August is historically the worst month for crypto. So, buckle in. But if you step back and look at the macro trends, I think the macro economy is in good place. I think crypto regulation is in great place. I think institutional demand is in an exceptional place. I think the drivers of stablecoin and tokenization and concern about fiat currencies are going one direction, which is up. I think that's a pretty good combination. So we're bullish.
For Matt Hougan, there has been a definite shift. While Bitcoin continues to garner media attention as digital gold and a safeguard against the devaluation of fiat currency, Ethereum is becoming the quiet darling on Wall Street. For what reason? Stablecoins and tokenization are two words. Ethereum is now viewed by major institutions as essential infrastructure rather than merely a speculative token. Tokenized assets such as treasuries, real estate, and even conventional securities, together with stablecoins like USDC, are progressively being constructed on Ethereum, Solana, and other significant Layer 1 networks. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
So, emerged from people who spent their nights, weekends, and every waking hour thinking about this space, which is fine when it's an option and you can invest in it, but you don't have to. But as it becomes something you have to invest in order to just have broad-based exposure, as it effectively becomes part of the global investing benchmark, you have people who need to put 1 to 10% of their portfolio into it, and they can't spend 90% of their time learning about it, right? They need high-quality structured products, whether that's index-based, that are just capturing the beta, or whether that's active based, maybe with an AI overlay capturing alpha potential in the space. That's what they have the time to invest in. They don't have the time to pick and choose and follow 50,000 tokens the way maybe people could in the early days of crypto. Things started to change in the start of Q2, and you can see this in the flows into Ethereum ETFs. And the big thing that started to change was people in the TradFi space got really excited about stablecoins. And they started to get excited about tokenization. And so now you have these two narratives in crypto. You have Bitcoin protecting you from fiat debasement. So let's call it Bitcoin is digital gold. And then you have Ethereum and other assets linked to stablecoins and tokenization, which is a narrative that Wall Street can get very interested in. We've seen this expressed in two ways at Bitwise, actually. One way is obvious, which is flows into the Ethereum ETF. I think they've done more flows in the last month than they did in their first year. But the second way is flows and interest in index-based strategies, because people are like, well, some of that's on Ethereum, and some of it's on Solana, and some of it's on XRP, and some of it's on these other things. And doesn't that make us proximate to what's going on Uniswap and Aave and Ondo, and shouldn't we have exposure to that? Most people are just thinking Bitcoin and ETH, but we are seeing more and more people start to, once you go beyond Bitcoin, the world opens up to you. And I think that's a little bit what's happening now. I think people aren't thinking through the second order of, I'll answer it this way. People aren't thinking through the second order effects of the growth of stablecoins. So I think there's a common understanding now that stablecoins are going to be a big deal, right? We're 250 billion today. Maybe we'll be 3 trillion in 3 or 4 years. Everyone will have a stable coin. JP Morgan will have a stable coin. Bank of America will have a stable coin. Well, it's everyone. And you're going to be able to see them and your crypto wallet side by side with your bank account, right? JP Morgan just announced a deal with Coinbase where you'll be able to have your Chase bank account and your Coinbase wallet on the same screen. So the lines between those are blurred. And the way people are reacting to that is, I want to own Ethereum and Layer 1s that serve as the infrastructure for stablecoins. Sure, I agree. I do too. Or I want to own Circle, which is issuing. Sure, I do too. But what people aren't thinking is the second order effect. The second order effect is 1 billion people are going to have crypto wallets, which they won't even call crypto wallets. They'll just call wallets. So 1 billion people will have wallets that they interact with every day. And once you have a wallet, you're one step from DeFi. which is why I'm so excited about the growth of DeFi. And I think I think it's dramatically underappreciated. Look, we're really excited. I actually think we may see a significant acceleration in prices, particularly in Q4. There is simply more demand from ETFs and treasury companies than there is supply by a factor of 4, 5, 10 in those markets. And I think that will pressure prices higher. We're sticking by our forecast that we made in December 2024. We think Bitcoin ends the year at 200,000. I think ETH hits a new all-time high. I'm actually maybe even relatively more optimistic on ETH than Bitcoin, because I think it has some catching up to do to where it is from a narrative perspective. But all-time highs for ETH, 200,000 for Bitcoin. I think it's going to be a very exciting end of the year. I should say August is historically the worst month for crypto. We're doing this on August 1st, so, buckle in. But if you step back and look at the macro trends, I think the macro economy is in good place. I think crypto regulation is in great place. I think institutional demand is in an exceptional place. I think the drivers of stablecoin and tokenization and concern about fiat currencies are going one direction, which is up. I think that's a pretty good combination. So we're bullish.
Now let's discuss regulation. For many years, regulatory uncertainty rather than price fluctuations has been the largest barrier to the widespread adoption of cryptocurrencies. Without knowing how the law would handle it, the majority of investors have been reluctant to invest significant money in the sector. That is rapidly changing now. Hougan cites recent events, such as Paul Atkins' project Crypto Speech, as evidence that American regulators are moving away from attempts to shut down the current financial system and toward integrating cryptocurrency. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Feels like magic compared to the traditional financial system when you have a good experience. And I think all the people who are like, oh man, I wish I invested in Coinbase in 2015. Like, why didn't I have access to that Series A? Like, you have that in these DeFi protocols. You have such enormous upside if regulation and crypto wallet adoption and UX align, the growth is just going to be massive. And you can start to see bits and pieces of it. But, and DeFi TVL is, at a 3-year high. But I still think the market hasn't realized that 3-year high will look tiny in a few years when those three forces align. I think indexes will be a significant portion of the market. Every market needs index strategies and active strategies. That's true in equities. It's true in bonds. And I think indexes could eventually be 20 or 30% of the asset management market inside of crypto. Right now, they're sub 1%. So that's one of the reasons I'm so bullish. Indexes aren't quite the same in crypto as they are in traditional funds. You need more screens to remove assets with risk. As an example, we screened out Luna from our index because we recognized the sort of inherent flaw in it before the market. So you need more of those negative screens, but there's no reason to imagine that crypto won't be like every other asset class, which is indexes will play a big role. To touch on the ETF question, there's actually a large number of ETF people in the crypto market today. Many of the people you see move from TradFi to crypto are ETF people. And the reason for that is that ETFs in the early days were a lot like crypto in its early days, which is to say they were the disruptor and people didn't like them. The media didn't like them. The Financial Times called ETFs weapons of mass destruction. Vanguard didn't like them. Vanguard doesn't let you invest in crypto. They didn't want to do ETFs because they thought they would harm retail investors. There were congressional hearings about ETFs being bad for the American economy. And I think people in the industry saw all that nonsense. And we knew that this was a better, more efficient structure than traditional mutual funds. And we saw it eventually win, Today, ETFs are 15 trillion. So I think that's why so many ETF people moved on to crypto, because we've seen this disruption before. We've seen this skepticism before. And we know that better, faster, cheaper ultimately wins. It can take a while. It took ETFs a while. but we know eventually it will win. And
Matt Hougan likened the current state of cryptocurrency to the early days of exchange-traded funds. ETFs were controversial and misinterpreted in those days. They were referred to as weapons of mass destruction by the media, opposed by large companies like Vanguard, and even discussed in congressional hearings. However, ETFs eventually proved to be more affordable, effective, and beneficial for investors, and as a result, the market has grown to $15 trillion. He thinks that cryptocurrency is in a similar phase. Investors currently lament that they lost out on significant opportunities, such as Coinbase's early rounds, but DeFi protocols still offer these kinds of early-stage opportunities, particularly if regulations improve, wallets get easier to use, and user experience gets better. DeFi believes that when these forces come together in a few years, his total value locked, which is currently at a 3-year high, will appear insignificant. Matt is particularly optimistic about cryptocurrency index funds. Index strategies are dominant in stocks and bonds, but they still hold just over 1% of the market in cryptocurrencies. As the space develops, he anticipates that percentage will increase to 20 to 30%, with special screenings in place to eliminate risky assets. He added that because they see the same pattern of disruption and long-term success, a growing number of ETF professionals are venturing into the cryptocurrency space. The market will witness more innovative cryptocurrency exchange-traded products beyond Bitcoin and Ethereum as the regulatory landscape clears up. Features like staking will be integrated into products, reducing the barriers to adoption for conventional investors. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.